So speaking of those holdings, let's jump into kind of looking at the long-term portfolio. We do a dive into this once a month at the end of the month. So obviously we literally just had February month end, so I can have a look in here and see what my current allocations and holdings and returns look like. So you can see really it's just this 1 month P&L column that is the most sort of interesting because we're updating it every month. So we've got the biggest, I mean, we're up actually 6+%, right? 6.5% in a month, which is a staggering number to make in a month, right? It's not normal. The reason why we're up that much money is because the crypto part of the portfolio, which is my kind of Deribit account where I hold most of my crypto, that is 17.5% of my entire portfolio, okay? And guess what that part of the portfolio did in the last month, right? Bitcoin was up like 50-odd%. So if Bitcoin's up 50%, then the whole crypto space is up a lot. And if I'm kind of running that and I wasn't running it completely without hedge, I was hedging part of it on the way up, which is why I didn't make quite as much as maybe I should have done. Maybe I should have made 8% if I had done nothing and ran all my crypto naked. But obviously you guys in my crypto subscription know that I put on hedges, I put on various things, and those have definitely cost me on the way up. But I like it because it kind of smooths out my drawdowns when things go down. So that's how I run it. But anyway, that part of the book making like 4.65%, that Deribit portion. Then we obviously gave some P&L back on uranium because the uranium correction of about 20%. So Sprott, you can see dropped 80 bips there. Yellow Cake, Kamiko. So you add up all the negatives really are just coming from uranium. You can see that here in this bar. If we look at the blue bars, we've got, best part of 200 basis points hit taken in commodities, all coming from that uranium. We've got a positive of about, what did we say, 500 plus basis points on crypto, which are crypto holdings. But then actually within equities as well, we made a couple of percent in the last month. And actually most of that is coming from the likes of Coinbase, Mara, etc. Right? So you can see 50 basis point gains from we got Palantir in there as well, which is obviously a growth name that sits in the ARK basket. So Palantir made a bit of money as well. We got some Taiwan Semiconductor as well that made some money. So we don't have tons of tech in there, but we do have some crypto mining stocks. We have some Coinbase, we have some Palantir, we have some Taiwan Semiconductor, and those names all did pretty well and made us about 200 basis points over the month, right? So that's kind of how the portfolio is looking. If you look at kind of the allocations, you can see how it breaks down. Obviously, uranium, largest chunk of our commodity breakdown by a country mile. We do have scraps of gold miners, silver, etc. We've got a nice broad allocation across commodities. We've got some industrial metals, we've got some ags. Obviously those ag allocations have been dropping as ag has been underperforming for a while, but that's kind of how I've constructed the portfolio in commodities. The equity sector breakdown, you can see we've got a chunk of Asia, we've got a little bit of tech, and then we're spread across various places with a bit of crypto here, Brazil, mining, energy, defense, etc. And then outside of that, if we look at it on overall asset allocation, we do have some bonds, not a lot to be fair. We've got some equities makes up about 24%, commodities 25%. We've got crypto making up near 20% here, and other things, cash is at around 16 right now. So still a large chunk of cash that I could deploy if we were to get any kind of meaningful dip where I felt like, okay, I can maybe put some of that cash into tech or something like that if I want to buy the dip in tech because I think it's going to continue going. But the truth is that cash allocation has probably been bigger than I wanted it to be, but I haven't felt too stressed about it because I've had some really high octane longs like crypto, like uranium. So even if I'm not fully invested, those things have gone a bit nuts to the upside like last year. That I was kind of compensated for being probably too heavy in cash, basically, right? So that's kind of how my asset allocation is and how it's been doing. Actually, I'm pretty shocked at just how much crypto has made in the last month, and that's why I've actually hedged out all of my Bitcoin. So if we go another 50% in the next month on crypto, I'm not going to make as much money in the long-term book because I have hedged out most of my Bitcoin. I've hedged out half of my Ethereum. I've still got some Solana, but it is a smaller part of the portfolio. It's much smaller, in fact. So yeah, I'm not going to participate if it just keeps on going in a straight line from here. I am looking for some pullback. I am looking for some consolidation. There's a lot of things that are concerning me on that front, where speculation looks like it's gone too far. All these meme coins are going crazy. All these funding rates are going absolutely through the roof. So these sort of things are a bit worrying signs, and that's why I much prefer to be better hedged right now overall, and in a place where I can then deploy cash, take off hedges, things like that in the face of some sort of correction. But to be clear, I well and truly expect new highs on Bitcoin. I mean, we're pretty close to it already, but I would not be surprised to see 100, 120,000 even by the end of this year in Bitcoin. So I don't want to be in a position where I'm just fully hedged out and I don't participate on any of that from here to 120 or whatever. So I will not be stubborn. I've got hedges on right now because that's my tactical view. But if I get proven wrong and we just smash through new all-time highs in short order, then I will probably unwind some hedges and at least maintain some long on the way up, basically. Okay, so that's my general thoughts, and that's how I'm thinking about the long-term portfolio.